Most retail traders get wrecked in the first 10 minutes of the New York session, not because they're bad traders, but because they're on the wrong side of the Judas. Today I'm going to show you exactly how to identify the Judas, flip it, and profit from it. Welcome back to Stoic Capital. I'm going to take you through version 2 of our Judas Swing strategy, and this version is different. We've tightened the rules, made it 95% mechanical, and have got more than 12 months of data to back it up. So let's get straight into it. Here's what we're covering today. 8 points total. What is a Judas Swing? The assets and sessions we trade. How we use SMT divergence as a confirmation tool. The exact entry rules using FEGs and breaker blocks. Risk management and partials. Our red folder news filter. This one will save your account. Then full chart breakdowns and real live examples from my Notion journal and FX replay. Stick around for the example section, that's where everything clicks. The Judas Swing is a concept from Inner Circle Trader. The idea is simple but powerful. It's a deceptive price movement that occurs shortly after the session opens, moving opposite to the expected daily range. It's designed to lure traders into taking positions in the wrong direction by triggering emotions or chasing early momentum. This false move often targets liquidity like previous highs and lows or fair value gaps before sharply reversing in the actual direction of the trend. Think of it like this. The market opens as 9:30, as you can see, sells off hard with those two big candles, breaks a recent low, triggering sell orders from breakout traders, but then ends up reversing. That's what the Judas is. The trap is set. The retail traders are short and the smart money is now buying at a discount. What we're doing is waiting for the false move, confirming the reversal, and entering in the real direction. Now, before I get into the rules, let me show you why the strategy is worth learning, the numbers. Over more than 12 months of data, this strategy averages about 22 trades a month. The win rate is 33%. On full wins, 16% on break-evens, 15% break-even plus partial. Those are trades that went into profit, we took partials, and they came back to break-even. And those trades are 1-hour trades, still profitable. And the 36% are full losses. Now I know what you're thinking. 35. Now I know what you're thinking. 33% win rate, that sounds low. But here's the thing. When you're averaging 2.5 hour on your winners and only losing 1 hour on your losers, the math still works massively in your favor. And if you exclude the break-even from the calculation, you get a win rate of 39% and a loss rate of 43%, with a break-even plus partial of 18%. If we combine the break-even plus partial trades into the win rate, since they're actually winning trades, you then end up getting a 56% win rate, with the average R dropping to 2.03 and a loss rate of 44%. Now, before we move on to the next section, I would like to end it from a quote from Bruce Lee, which says, "I fear not the man who has practiced 10,000 kicks once, but I fear the man who's practiced one kick 10,000 times." And that's exactly what we've done here with the strategy. It's one very clear setup that we've tested and used over months and months and months, refining it, and here we are now sharing it with you. In version 1, the strategy ran on 3 US indexes, which was the YM, the Dow Jones, NQ, the Nasdaq 100, and ES, the S&P 500. This year, we added a new instrument, which is RTY, the Russell 2000. The session window is 9:30 to 10:20 AM EST. That's it. The whole strategy lives and dies within that 1 hour period. You don't need to watch charts all day. And there are hard daily limits like max 1 winner, max 2 losses, and max 3 trades per day, which means if your first trade is a winner, you get off the charts, close your laptop, and done for the day. If your first trade is a loser, you're allowed to take a second trade. If that trade ends up being a winner, you're done. If it ends up being a loser, you're done. And you have max 3 trades a day. This is when your first trade results as a break even, and your second trade results as a break even as well. Then you're allowed to then take a third trade. There's no other condition that allows you to take a third trade besides your first 2 trades being a break even trade. This isn't just risk management, it's discipline. 2 losses and you're done. Protect your capital. If there's high impact news at 10 a.m., you don't take trades between 9:50 and 10 a.m., which means 10 minutes before the news, you stop looking for trades until after the news. And right here you can see the illustration of the entire strategy. You can get this exact same image if you want to save it on Twitter and Instagram. And this is the full-on trade checklist. Every single trade needs to hit these before you even think about entering, which is between 9:30 and 9:40. Price needs to sweep liquidity, the previous high or low. After the sweep, I need a market structure shift in the opposite direction, then a pullback to a preferred PD array. As you can see here, we had our market structure shift. We first swept liquidity. Then we have SMT as well, which is the most important thing, which means when Nasdaq makes a higher high here, one of the other instruments has to be making a lower low instead of a higher high. So with our SMT, then we have a market structure shift and I'll pull back to our PD array, which is the unicorn setup, which is a breaker block plus a FEG. We then enter our position, stop loss 2 candles before the FEG candle, and we target a 1 to 3 risk to reward. We take partials at 2R and we move our stops to break even when we have 2 continuous breaks of structure. Now that is done, let's go over to our Notion journal where we'll show you a few examples of how to use this. Okay, so here we are in my Notion trading journal. Gonna go over a few examples, so let me go down to the 9:30 Judas Swing. We'll look at an example from 2024. I think this is the first one that we recorded. Okay, so this is on SPX. You can see that we're at the market open. Then we had first impulse going down, slight pullback, and a second impulse. So this is on ES, while on Nasdaq, the first 2 candles went down, but we didn't get that second impulse, went lower. So this here gave us our SMT. So it's SMT between Nasdaq and ES. So we mark that out and wait for market structure shift. Here we get given our market structure shift. Then we highlight our breaker and our FEG. We take an entry where the 2 overlap, which would be right here. And our stop loss would be a candle before the FEG candle, right here. And as you can see, there's a take profit for 1 to 3R. Would have taken 50% partial at 1 to 2, meaning would have made 2.5R on this 1 to 3R trade. Now, let's look at other examples. This is a break-even trade we had on US30. So the market opened and we dropped lower on US30. While on the meanwhile on Nasdaq we opened and just pushed higher. So that gave us SMT. Then US30 gave us our market structure shift first. So we dropped, moved up, took out this high, mark out our breaker block and our FEG, waited for pullback, took our entry right here, stop loss below the candle before the FEG, we targeted 1 to 3R. Price shot up to 2R. We took 50% partials here. And price retraced back to our entry. So this was a break-even and partial trade. We've made 1R total on it. For US 30, we opened going lower on Nasdaq, but on US 30 we went higher. That's the SMT. Mark structure shift, break or block FEG, pull back, we take our entry. Another great example of a winning trade here. Nasdaq opens, we go lower. US 30, we just go higher. We wait for our reversal. We have a mark structure shift. Highlight the breaker block and the FEG. Take our entry here. Put our stop loss one candle before the FEG. And we targeted 1 to 3R. And this was a winner. This is a perfect example of what we look for. So, let me show you a losing trade. This is an example of a losing trade we had. Nasdaq, market opened, we pushed higher. Whereas on US 30 opened and went lower. So as we were going higher on Nasdaq, we waited for the market structure shift, which happened right here. Just didn't mark it out. And we highlighted the breaker block. There's an FEG right here. So we would have taken our entry here. We took our entry here and put a stop loss one candle before the FEG here. And we got stopped out here for negative 1R. So this is an example of where the Judas does not play out. It's going to happen a lot, as you're going to lose at least 35% of the time. So this is all you look for. SMT, mark structure shift, breaker block, fair value gap, pullback. As you can see here, Nasdaq went lower at open, whereas S&P 500 went higher then went lower. So every day the first thing we're looking for is SMT. Then mark structure shift in the opposing direction. Then we can highlight the fair value gaps and the breakers for entry. This is the first example that we have on the first chart, as you can see. Nasdaq opened, went lower, swapped liquidity, whereas Russell 2000 opened and just went higher and higher and higher. Mark structure shift, fair value gap, breaker block, entry, where they overlap, target 1 to 3. So now that we have that out the way, we can go over to FX replay and go over a few examples there. Okay, so here we are on FX replay backtesting platform. There's a free trial in case you want to try it. So we've selected our 4 assets, which is ESNQ, YM and R2I. And for our CFD traders, that is S&P 500, Nasdaq, US 30 and US 2000. So to make this fair, we're going to use a random date generator to avoid hindsight bias. So I've already got the website loaded up. Then we're going to look for date anywhere between 2023, since that's around the time we started trading this, 2023, 2022. And then our end date is going to be today, which you can see here, it's the 28th April, the time over there. So now that we have our time period selected, let's generate the date. We got the 27th of April 2026, which is just yesterday. So that's too close to backtest. So we're gonna have to just pick another random date. Okay, that's much better. Got September 18th, 2023. Time, as you can see, is still the same. So September 18th. Go here, select date 2023, September 18th. Then end date doesn't really matter much. You can insert what you want. Then we go create session. I'm gonna give it a few seconds to load up. So it does take a few seconds. time is there still. So as you can see, I have each asset put into a single corner of the chart using the split screen mode here. That way I can track all SMTs at the same time. There's a free way to do this in TradingView. If you don't have TradingView Premium, if you'd like to know, just mention it in the comment and I'll release the video instantly showing you how to do it. But yeah, okay. 15th of September, let's go to the next New York session. So here we are, 18th of September, which is a Monday. Got our assets open. It's 9:29. Don't take trades in the first few minutes so we can skip the first few candles. It's 9:36. Now we've gone lower. So now here's the SMT. Look here. R2I opened, moved up a little bit, then went lower. But then if you look at NQ opened and moved up till 9:37, then started reversing. Same thing for ES. Moved up till 9:37 and started reversing. So we do have SMT here. Wire moved up till 9:40 and started reversing. So our SMTs would be something like this. SMT. Then now YM also gave us a market structure shift. Look here. You can highlight this. Then now we highlight our breaker block. This is breaker block at the FEG. And then the same thing on ES. We have our market structure shift. And then we have our breaker block here. And we have the FEG. Just made a mistake here. FEG. So the SMT is there, as you can see. ES and YM went higher. And US 2000 just went lower. So we're going to want to take the entry. We're going to want to take the entry on US 30 because US 30's high is 940, whereas R2 is high is 936, which is the same as Nasdaq and SPX. So I'm going to place our limit here. Stop loss 1 candle before. +1 pip for spreads. I target 1 to 3. This is the trade setup here. And we're going to place the order. So, and then we're going to wait for an entry. Okay, so there, as you see, we're triggered into the trade here. So let's just play it, see what happens. Okay, so we got a drop. So as I said, we move our SL to break even after 2 breaks of structure. So this here is our first break of structure. So we want to see a second one. Okay, pulling back. Now we broke this low here. This would be our second break of structure. So now we can move our stop loss to break even. Then, as I said, if you remember, we take a 50% partial at 1 to 2. So this is gonna wait till price gets to 1 to 2. Let's see if we get there. Maybe we don't. Okay, 1 to 2, 1 to take 50% off. Took partials, and then now we've made 1 R since we took 50% partial. So whether this pulls back to our entry or it's TP, it's a win-win situation. So we can just fast forward this, see what happens. And then if you look closely, this came back to break even. So this would have been a break even plus partial trade. So we had our SMT, market structure shift, fair value gap and breaker block, take our entry. Price came down to 2R, took a 50% partial, which gave us 1R. Then price came back to entry to stop us out. So we made 1R on this trade, as you can see, 1% here on the balance. Now we can go over to the next day. This is Tuesday now. And as you can see, the time, just to show that I'm not skipping this and checking it myself beforehand. We seems to be a trending day going down. It's 9:30. Let's see what happens in the first few minutes. So your RTY opened and just shot up. The other ones opened and are kind of consolidating. Now we have SMT. If you look here, RTY open higher, SMT with YM US30. US30 went lower. And these other ones went higher a bit, just like R2I, but they didn't yet shift to the downside. So with R2I having shifted to the downside, we're now going to mark out the breaker block. Here it is. So if you remember, I said if the wicks are bigger than the body, we mark out the entire candle. But if the body is bigger than the wicks, we use the body of the candle for the breaker block. Then we're going to mark out the FEG, which is a big FEG. FEG bear. Then our market structure shift that happened here. Market structure shift. And we're going to place our sell limit here, stop loss, the candle before the FEG. 1 pip for stop loss spread. We're going to target 1 to 3. Let's see if we get triggered. Sell limit placed. Let's go. So it looks like, yeah, we might not get an entry. Okay. No entry for us here, which is unfortunate. This was such a clear, good setup. Okay. No entry. Okay, so if I take profit, so we can cancel this. We still look for trades till 10:20, but by the looks of it, there's nothing that's gonna form here at the bottom. Substance. Yeah. Nothing here. 10:20 hit. No significant SMT. So we go over to the next date, which is Wednesday. So I think I'm just gonna show one more trade. Will be it. So it's Wednesday, it's 9:30. Okay, so we're gonna go full screen here. So it's 9:30. Now we're gonna skip past the first few candles. We have a drop off on most of them. R2 is pushing higher. Okay. So 931 is the low for most of the indices. So there's no direct SMT. If so, move higher. Okay, they're going higher. Now we've just had SMT. Don't know if you noticed, but Nasdaq here went lower, while every other indice from that point went higher. So that is SMT. And we're gonna fast forward. So we have market structure shift here. Space is too small for me to type it out, so I'll just put a candle. Then here we don't have one yet, but on this we have a market structure shift as well. We're going to wait for FEG and a breaker to overlap. Here's a breaker. Here's a FEG. So ES and YM gave us breakers and FEGs, whereas R2I gave us the breaker, but there's no FEG within the breaker. The breaker is below the FEG. The FEG is below the breaker. So we don't use that. So we can set our sell limit. Yeah. Stop loss here. Candle before FEG, target 1 to 3. Base limit. So now we've been triggered on YM. Just gonna fast forward this. That is a losing trade, as you can see. So now we can go over to the next day. So now we're back to break even. We have one break even plus partial win. And then we have one loser, which is why it's so important to take partials. Now this is Thursday. So I'm gonna skip the first 5 minutes. We have our open. And already we have SMT. So if you look at this, YM opened and went lower, SMT. R2I opened here, went a bit higher, and went lower. Same thing for Nasdaq. Nasdaq went a bit higher. And ES went lower. So get a market structure shift on Nasdaq. R2I will take the position. With a shift, we don't have a fair value gap and a breaker here. We have our breaker here, but no fair value gap within that range to use. So just keep going. Now we have another SMT. So now if you look here, YM made this SMT here. Wow. Nasdaq gave us this SMT here. So YM moved higher while Nasdaq started to move lower. Everything else moved lower, but YM moved higher. So that's SMT. YM. So we have a shift already. Break a block. Then we can highlight our FEG here. Then we place our limit. Stop loss here. Target on 3. Place order. Okay, so our limit set. Now we just wait. Okay, the market moved higher. So we're gonna cancel the limit and use the FEG that's higher and overlapping of the breaker block, which is this one here. So I'm gonna move our entry to there, cross each other. Now stop is going to be target on 3. It's another limit order. Triggered in. Okay, that was a nice tap and go there. We add 1 to 2R so we can stop loss to break even. Then we can take a 50% partial. So close 50%. Next thing we see, if the rest comes back to stop us out or to go higher, doesn't matter, we've made our money. Price eventually hits take profit for 1 to 3 hours. So as you can see, markets were moving lower till we got to a point where here the 30 started to move higher while everything else was moving lower. So the ones that moved lower, we waited for structure shift. We had a break block FEG, took our entry where they overlapped, and then with the stop loss 1 candle below the FEG candle. So how the break even works is that we break even after 2 consecutive breaks of structure, or once we hit our 2R partial. So if we hit our 2R partial before 2 breaks of structure, like here, we only had 1 break of structure. If we had 2R, we move our stop loss to break even. We take our 50% partial. We just let the rest of the position play out. I think that's all the examples I'm going to use today. So that's it for this video. Hopefully you found it educational. If you want to learn more about the strategy, you can simply join the Discord community. You to ask questions. And yeah, thanks for watching. Don't forget to hit the like button, subscribe.